From paper money to plastic cards, and now to digital currencies, the way we think about money is evolving faster than ever. In this episode of News Nexus, we dive deep into the world of digital finance, exploring Bitcoin, blockchain, central bank digital currencies, and what lies beyond crypto. Welcome to The Future is Digital, Bitcoin and Beyond Explained, your complete guide to understanding the digital money revolution. Let's decode the future together. Let's start at the beginning with Bitcoin. Launched in 2009 by an anonymous entity known as Satoshi Nakamoto, Bitcoin was designed as a decentralized currency, meaning it doesn't rely on any bank or government. Bitcoin solves a fundamental problem: how to transfer money securely over the internet without needing a middleman. Bitcoin has several key features that make it revolutionary. It has a limited supply. Only 21 million Bitcoins will ever exist. It operates on a decentralized ledger, verified by thousands of computers around the globe. It's pseudonymous. Transactions are public, but personal identities are hidden. And most importantly, it's trustless. No need for banks or governments, just math and code. At the heart of Bitcoin lies a technology called blockchain. Imagine a digital notebook that records every transaction and is shared across thousands of devices. That's a blockchain. Here's how it works. Someone initiates a transaction. Miners verify it using complex mathematical problems. The verified transaction is grouped into a block. That block is then added to the chain of previous transactions. This is how the Bitcoin blockchain grows, one block at a time. Miners are rewarded with new Bitcoins. This process is called mining. Over time, mining becomes more difficult, and the rewards are cut in half every 4 years, an event called the halving. The last Bitcoin is expected to be mined around the year 2040. Bitcoin may have started the movement, but it's no longer alone. Thousands of other cryptocurrencies have emerged, known as altcoins. Some of the most popular include Ethereum, which introduced smart contracts, Ripple, or XRP, which focuses on fast, affordable cross-border payments. Then there's Cardano, Solana, and Polkadot, each tackling challenges like scalability and energy efficiency. These altcoins aim to address Bitcoin's limitations, like slow transaction speeds and high fees, while opening new possibilities. Today, we have DeFi, Decentralized Finance, NFTs, digital collectibles and ownership records, and decentralized apps, or DApps, that operate without centralized control. But blockchain isn't just about money. It's a foundational technology that's changing how we store and verify information. In healthcare, it can securely manage patient records. In supply chains, it can track goods from factory to shelf. In voting, it can ensure tamper-proof digital ballots. And in real estate, it can handle digital property titles and contracts. Blockchain is essentially a trust machine, where data is secure, verifiable, and permanent. Governments worldwide are responding to this revolution. Enter CBDCs, Central Bank Digital Currencies. These are digital versions of national currencies, issued and regulated by central banks. China has already launched its digital yuan. India is rolling out the e-rupee. The European Union is developing a digital euro, and the United States is researching a digital dollar. The goal? To modernize money, reduce transaction costs, and enable faster programmable payments. But unlike Bitcoin, CBDCs are centralized, not anonymous, and not limited in supply. They're government-controlled. Supporters highlight efficiency and security. Critics raise concerns about privacy and potential surveillance of personal spending. Let's also talk about stablecoins. These are cryptocurrencies designed to maintain a stable value, typically pegged to a fiat currency like the US dollar. Examples include USDT from Tether, USDC from Circle, and DAI, which is decentralized and backed by crypto. Stablecoins are the backbone of DeFi, decentralized finance. With DeFi, anyone can lend money, borrow funds, earn interest, and trade assets, all without a traditional bank. But DeFi isn't without risks. There are smart contract bugs, hacking incidents, and sudden market crashes. It's a powerful tool, but it must be used with caution. Let's not overlook the challenges of this new digital economy. First, volatility. Cryptocurrencies can gain or lose 20% in a single day. Second, security. If you lose your private keys, you lose your crypto. Hackers have stolen billions from exchanges and wallets. Third, regulatory uncertainty. Some countries embrace crypto while others ban it outright. And finally, environmental impact, especially from energy-intensive mining methods used in Bitcoin and other proof-of-work coins. So what's next? What does the future of digital finance really look like? Experts predict a massive transformation in the next decade. Bitcoin could emerge as digital gold, a hedge against inflation. Ethereum might serve as the backbone of a decentralized internet. Smart cities may use blockchain for identity, logistics, and governance. More countries will launch CBDCs. Regulations will mature, helping stabilize markets. Artificial intelligence could merge with blockchain to create intelligent financial systems. We'll see greater interoperability, blockchains that communicate seamlessly, and the line between digital and traditional finance will blur even further. The question isn't whether money will go digital, the question is, how far will the transformation go? Are we prepared for a world where wallets live on our phones, contracts exist on blockchains, and physical cash becomes obsolete? Thanks for watching News Nexus. If you found this video helpful, don't forget to like, share, and subscribe. Leave a comment below. Do you trust Bitcoin more than your national currency, or do you think government-backed digital currencies are the future? New videos drop every week. Until next time, stay informed, stay curious, and stay ahead.